Hey everyone, this is Robert Keens at goldsilverpros.com. It is Tuesday, August 11th, and I promised you guys an update on the gold and silver market, so I'm going to give you one. We've got a lot of action going on right now, so I want to go ahead and get to the data, and then we can talk about what is going on. So I wanted to show you the gold prices and the silver prices as we're talking right now. Obviously, we've had pullbacks. Gold is back under 2,000 at 1924, and silver is sitting at 2560. Those are substantially off their most recent highs. And remember, about 2 weeks ago when I said we are due for a correction. Markets don't move in straight lines. Rarely do they go straight up or straight down. They're like little jagged edges. You know, they have an overall shape, but it's a jagged edge up or a jagged edge down a lot of times. So let's look at the gold chart. We're actually trading at about, what is it, 1926, 1924 now. So I drew a red line at about that point. There is no significant line anywhere else on the chart, partially because we're in new territory with gold at all-time nominal price highs, not inflation-adjusted highs, but nominal price highs. So there's not a lot of trading lines that we can infer from here in terms of where this could fall, unless we want to go back to a 50-day moving average, which is this blue line right here, which is sitting at 1801, or a 200-day moving average at 1650. You could look at those as potential pullback numbers, or you could maybe draw a line here and say it somewhere around this, 1800 line. This could be a pretty good one. If we annotate this line real quick, here's a potential pullback number, because it's got two significant values at about 1800. It's got the 50-day moving average, and it's got this previous peak back in, let's save this chart real quick and I'll tell you when that occurred. The previous peak occurred in late 2012. So it could come back to here, and that would be a little bit of a handle. But really, if it's going to form a cup and handle, or if you guys remember me talking about that before, it's probably going to fall back to about 1700, maybe in this range. That's a good handle to the cup, and then it would resume. Now, just because I've been talking about a cup and handle doesn't mean that that has to occur. It's just a popular formation in a bull market like this, where you have this massive cup formation. A lot of times the handles form. Why do the handles form? Because people are pulling out of that trade. They think it's too frothy. They think it's overbought. From a technical perspective, the traders will get out. Now, the long-term holders like me aren't doing anything with their position. And certainly we can see by the volume that the long-term holders are getting more numerous in nature. And we can see that on COMEX and the futures as well, based on people standing for delivery. That being said, it doesn't mean everybody's doing that. There are a certain amount of people who just want price exposure, and they're going to trade up or down on the price. And when they hit their technical peak or whatever criteria they have, they're going to sell off. So we're in a little bit of a sell-off here. I wouldn't panic personally, but it could possibly come down more. Do we think it's going to come down more? Well, let's go and look at some of the numbers and see if we can determine what's going on in gold, and maybe when that peak or that trough could occur, where they're going to get that trough in the handle, or whether we're going to get another peak on the gold price. So here's the open interest report. If you remember from the CME group, this is from August 10th, so from yesterday. But this shows how much open interest there is. We're on the gold section right here. Open interest is a combination of longs and shorts. It's how many people have an interest in the market and are taking a position. So you can see this little bell curve. If you turn this on a side and look at it in gold, there's this little bell curve, and I've highlighted December 20th contract. December 20th is the top of that bell curve. That's decision month for gold, because there's a ton of open interest, whether it be long or short. And I feel like that's going to be an inflection price for gold moving forward, because there's so many contracts there. It depends on whether the longs win or the shorts win. If the shorts are winning in this battle up to the December month, we may have that pullback. If the longs are winning, we may be in the next leg of the bull market, and maybe a massive step up, because 249,379 contracts of 100-ounce gold is a lot of gold on the futures market. These are really big numbers. Either way it goes, I think December is a really big inflection point in gold. Let's look at some of the delivery notice numbers to see where we're going to be in gold overall. As you recall, in one of my last videos on gold, I talked about the delivery notices. The delivery notice is basically who wants delivery against the short position. So there's shorts and longs on the market. The longs say, I want to take delivery this month. If you remember, the intent date is 2 business days before the first trading day of that month. So 2 business days before the beginning of the August 20 trading month, which was on August 3rd, because we had a weekend in there in between, would have been July 30th. So a massive 32,732 contracts looking at 100-ounce gold came in on the first day, and then it kind of slowed down. Then we had a little bit of a bump here at 5,000, and then it's come down quite a bit. And then yesterday, August 10th, it came up just a little bit. But it seems as though there are 2 factors I want you to consider. There's speed and acceleration. Gold is speeding up, but the acceleration in terms of people standing for delivery is slowing down. Okay, so we're still going, maybe that we're going from 70 miles an hour to 55 miles an hour in terms of the amount of people standing for delivery in the gold market. So it's slowing down, but it's still moving forward at a high rate of speed. So that may be a little bit of waning interest in the gold market here. And again, when we look at the open interest report, maybe that can make some sense, because I think people are looking at December as the true inflection point. So it's possible, going back to the chart, that we continue to have a little bit of weakness here. And then December is where we see the move up, if it's going to do a cup and handle. Or an alternative is it's a here range trade. It range trades from its high over 2,000 back to about 1,800, back and forth like this. And then December comes, and then we find out, are we going to have a big, are the shorts going to come in hard, or the longs going to come in hard? We don't really know. We'll have to pay attention to those delivery notices. Why do I pay attention to delivery notices? Because when you have a long and a short, and certainly all of these banks are issuing longs and shorts themselves and playing both sides of the market, the open interest just tells you that it's going to be a decision month or not, that there's a lot of interest. But we're not going to know how much gold is going to be taken off that depository until we go and look at the delivery reports, the delivery intent. Okay. And if we look at August, certainly there's 46,280 so far in August, a contract standing for delivery. Of course, the high month was June, but 46 is a pretty high month. We may get back to around that 55 number. We'll have to see what the daily numbers give us there. We may get back to that. And so that, that tells me we would consider to have a strong gold price, although it may not go up to 2,100, 2,200. But December is going to be that month. And I have a feeling December is a month when we see the next big part of the bull market go up, because it wouldn't make sense for all of this open interest on this report to be short. That would be a massive gamble by the bullion banks and their customers who they're representing on the markets, for all of them to go short. I mean, it could be, and you could see the gold price slam down. But I'm anticipating we're going to get more delivery notices in this month. So for gold, you want to pay attention to December. That is the key. In the meantime, look, it could range trade. It could go up. It could go down. I think it's going to stay fairly strong. I don't think it's going to come back down to the 17 to 1800 range just yet. But if it does, it will probably happen in December if the shorts come in really, really strong. We'll have to maintain looking at these delivery notices for the gold market to kind of see what direction it's going. But December is big. Now I want to go on to the silver chart. Now it pulled back a lot. We got almost $30 silver. And I drew this green line because $30 is a psychological point. And, whenever you go in 5s or 10s, those tend to be psychological points for market participants. A lot of people won't want to bounce up through that. So you can see the bounce here at just over 29, and it came straight down to 26. It's actually sitting right now at 25.29. So, sorry, get back on the silver chart, 25.29, so about right here. Okay, so it may retest. Remember this resistance line here that we tested a couple of weeks ago? We hit it once, came back down and came back through. Maybe it comes down and bounces right off of it again before coming back up. I don't know. But I can tell you this, September is going to be a big month for silver, and I'll show you why in a moment. But at the end of the day, it just got a little too frothy. People were taking profits. You saw the shorts come in here and say, we're selling. But I think September is going to be this massive inflection point, and I want to explain why. So we look at the open interest report. Let's go down here to silver. Ooh, I missed the silver. Let's get back up to it. In fact, we'll just do a search. In any case, there is a massive amount of open interest in silver on this chart. There's the mini silver futures. COMEX silver, here we go. Sorry, I didn't know why it took me that long. So September is this massive month, massive open interest. So there's not this huge bell curve for silver like you have in gold. In gold, it's December. You see this building up to December as being the decision month for gold. Are we going up? Are we going down? That is September for silver. 241,328 contracts of 5,000 ounce silver. This is massive in the silver market. This is a massive amount of open interest. This tells me September is going to be the decision month for silver. We going up, we going down, it's going to be September. And if you look at the chart, the delivery notice charts for silver, I think we've had a lot of building. So here's the 2020 silver futures. Now we came in, 475 contracts here, 219, and then it died on 8.5 and 8.6. It was 3 and 6. And then the last few days it's been 25 and 16. So this is really starting to die off, the interest in silver. And I think that's why you saw the silver price drop back down as much as you did. If you look at the numbers, people, the last few trading days have not had a lot of interest in taking delivery of silver. So obviously, you know, both in gold and silver, you saw them come in the first couple of days and then that momentum died. And so that's what tells you we're a little bit frothing the chart and it needs to come back. You see that correlation between delivery notices and the price. And this is what I've been showing you guys for the last few videos. I've been showing you there is a direct correlation between delivery interest and the price. But again, going back to open interest, this is decision month. Next month, we're going to figure out whether silver is going to rocket straight up or to come back down. If there are a lot more delivery notices for silver for September, then I think that you're potentially going to see a massive rise in the silver price. But again, we got to see these delivery notices come up, because if we're just going trades long and short and they're just paper trades and it has nothing to do with the metal, it doesn't mean a hill of beans in the overall silver price, because you're going to have longs and shorts and they're going to match. Nobody's taking delivery. They're just playing price movements. Okay. When people are standing for delivery, that's a different thing. Now I wanted to go, actually, let's go down and look at year-to-date delivery notices for silver as well, since we're on this report. And I believe it is at the bottom of this report. We've got platinum, and here we have the silver futures. I wanted to do the month to date, or the year to date, the monthly number. So we saw here in July, we had a massive amount of silver stand for delivery, 17,294. Now we have this massive drop off, 1147 so far this month. Again, 1147 in August, we see the price really kind of come down. So as August gets going, we punch through some of these psychological lines and then it peters out. Why? People aren't standing for delivery in silver. You see it here, only 1147, and you see the count as we go up during the month. So that's what's happening with silver. Silver and gold are acting a little bit differently right now. Bigger correction in silver than in gold. A little bit more interest in gold right now. But again, next month is decision point for silver. Massive open interest. And so I think we're going to get an answer in silver before we get it in gold. And then in gold, it's December. So silver right here in the September month, as we can see right here. And as we go up to gold, COMEX gold futures, it's December. That's that number right here, 249,379. Decision month, December for gold, September for silver. Just remember that. Now I wanted to look at the stocks. The stocks, you know, I kind of look at this just to see what the daily movement is. And it tells me whether metal is actually moving off the COMEX. So I want to add a little bit of layer of complexity, what we've been talking about before. Previously, when I was looking at these spreadsheets in terms of the depository statistics for COMEX, I was just looking at whether stuff was moving to eligible and registered, and I was looking at total ounces. So I go down here and look at how much were the total ounces available on the COMEX, how much is registered. Registered means available for delivery against a contract. Eligible means it has nothing to do with delivery for a contract. It could just be storage, and it means nothing, but it could be reserves if somebody wants to move it. Now let's look at this report. As we can see here, there's two ways to move money into the registered category. The first way Brinks did it on 8/11 was basically take gold from off market, off the COMEX, and bring it in straight to registered, saying, we got 160,691 gold ounces. We're putting it right into registered, up for delivery. So apparently they think that they may have to deliver 160,000 ounces. They didn't move it from eligible. Now we'd say, why didn't they move it from eligible? Well, let me explain how this works. When you're looking at Brinks or Delaware Depository or HSBC on these reports, you're looking at an aggregate number, and these bullion banks trade for, they represent clients. They trade for other traders. So just because they have an eligible 2,640,869 ounces doesn't mean that they can put it for registered category for delivery. It depends on which of their accounts have short positions and which ones don't, which ones are just storing their gold on the COMEX and eligible just because it's a safe place to put it. So apparently this number right here tells me that Brinks needed 161,000 ounces of gold to meet potential delivery against shorts that was not available in the eligible category. That's why eligible doesn't always tell you how much is available for delivery against contracts. So I wanted to make that point and come down here. This number here, this 36 million gold ounces, doesn't mean all of that is eligible against future contracts. Really, it's this number here, the 15,947. Now that number hasn't moved up or down all that much since we've been covering this over the last month. So in other words, people are delivering against contracts, but they're bringing gold from somewhere else. Maybe they're bringing it from their eligible total, which is in COMEX warehouse, or maybe they're getting it from some other warehouse. Maybe they're buying it straight off the market. It's coming from a refinery, but they're getting it without this total number changing all that much. And remember, about a month ago when I started covering this, I told you guys, you have to look at registered as the key number for how many months of delivery there is on the COMEX. So this number is pretty robust. There could be months and months of delivery available on the COMEX, except for we know in December there's a massive open interest, and maybe all this gets changed. We won't know, but they could get it. They could draw from eligible if it's not already pledged for some other purpose, or they could get it off market like Brinks did, where they just brought in 161,000 in that month. Now, JP Morgan did what some people may consider the more traditional thing. They just took it straight from eligible to registered. They just put 200,000 ounces and said, these are ours, or these are our clients, in which we can put into the client's same registered account against short. And they did. So some of that was available. But there's two ways to move gold into registered category: get it off market or get it from eligible. But you can't match registered and eligible and say, just because I have 20 million eligible here, I can satisfy 20 million additional in demand on futures contracts. No. That 20 million could be pledged for some other purpose. It's just in COMEX storage. It doesn't mean it's eligible. It could be for some other purpose. They could be selling it. It could be somebody storing it there for safekeeping. We don't know. So the real number to pay attention to, again, is total registered, and how much this number right here changes over time. In fact, we're going to highlight this in orange. How much this number changes over time. It has not changed substantially from July. And again, December is where we have massive open interest for gold. I feel like that's where this number, if it's going to change and it's going to drain stocks off of COMEX, it's going to be in December. So pay attention to December. December is your inflection point in gold. It's either going to go down, down or up massively. I feel like it's going to go up, but we'll have to see. Okay, now over to silver, a little bit of a different situation. Total registered right now went up 585,486 ounces. Most of that came from eligible, as you can see, 559,000 ounces. So the difference combined total 26,000 came from off market. That's why there's a black number here, or a positive number, an increase in combined total. So you take these two numbers and they must subtract, or these bottom two must add to this one. It means people brought in 26,000 from off market. The rest that was moved to registered came from eligible. And most of that came CNT depository. They moved a ton. Well, actually, this came from off market. So CNT moved a ton off market into registered, and then other participants, the Bank of Nova Scotia, moved it from eligible. Or actually, there's a 600,000 ounce move out of eligible off of the exchange. Excuse me. So 600,000 came off of the exchange, and then 600,000 came into the exchange. So it looks like it's eligible and registered, but actually it's not. Maybe it moved into eligible and then into registered. In any case, there was a lot of gold that moved on to the exchange. Again, we see gold moving on to the exchange. We just can't really tell the full movement because these are aggregate reports and they don't tell us. But so the one thing that you want to pay attention to is total registered. What's happening to that number? So we can see it went up 586,000 ounces. So until that number gets drained, we really don't know what's going to happen with the price. But again, in silver, decision month, September. I feel like in September, we're going to find out how much is going to be left on the COMEX. If there are more longs and shorts and those longs are standing for delivery, you're going to see that price shoot up. Again, we don't know what's going to happen right now just by looking at the charts, but that's why we have to follow this a couple of 3 times a week. We have to follow these numbers and see where they're going, and that will give us an idea basically of where we're probably going to go. So again, gold and silver both had a pullback. We saw in the numbers that there's still probably a little bit more interest short-term in gold than there is in silver. The COMEX numbers for silver fell off a lot quicker. In terms of standing for delivery, you see like it fell to almost 0 these last few days, whereas gold, it was quite a bit stronger. We go up to gold futures, it's quite a bit stronger. So that's why the gold price didn't pull back as much here as the silver price did, where it pulled back quite a bit. Actually, let's blow this out to the 12-year chart again, and we can see silver price moved or pulled back quite a bit more than gold did. Although I still think they're healthy. You know, markets don't move in straight lines. The silver could come down to 24.50, previous resistance line, and pop back up. We're going to find out quick in silver September. In gold, are we going to do cup and handle, or are we just going to resume the upward movement? We'll find that out in December. So expect gold to probably range trade for a couple of months. Maybe it has some sharp moves up. Maybe it has some sharp movements down. but I think December is where we're going to see the next inflection point. Silver is going to come much faster. Remember, the open interest on silver is very heavy for September. We're going to know in September if it's going to go like this or if it's going to go like this. And we'll continue to follow the numbers on COMEX to tell you what we think is going to happen, you know, as the long stand for delivery and the open interest, those big numbers come up. So we'll probably do more videos on silver leading up to September, and then we'll probably start to switch gears into gold leading into December, but I'll cover both markets for you. I know I promised you guys that I would do a market update, and I did. And I did both gold and silver at the same time. Hopefully you guys appreciate that. You've got your target dates, you've got your momentum, you've got some price indicators to give you a trading mark of where we think it could go. But we won't know until September for silver and December for gold if we're going to resume this massive gold market. We're just going to have to watch it. Now, I have a little bit of housekeeping here. So for you guys that may not want to watch this part of the video, feel free to turn it off if you were just here for the trading advice. But for my subscribers, I've had some feedback post the conference. Now, what I did at the conference was I held interviews with a lot of people. Some of them were roundtables, some of them were one-on-ones. And this is very popular with the conference goers. Now, I've started to put some of that content onto my YouTube channel, and I've received mixed responses. Some people loved it. Some people said they only come here for me. So I'm completely flattered that you guys come here for me, and thank you for that compliment. I like to network and talk with other people and bring you other people's opinions. So I think this is what I'm going to do. Because the overwhelming demand is for me to do these types of reports in gold and silver, I'm going to continue to do those going forward. I think I'm going to do them probably every Tuesday and Thursday or Tuesday and Sunday, some sort of rotation like that. You really only need 2 to 3 days a week to really cover this market and what's going on. If you guys have a preference, please leave it below in the comments and let me know whether you want to do like a Sunday, Tuesday, Thursday, a Tuesday, Thursday. I think the Sunday would be beneficial because it's a recap of the week and a look forward. And I think the Tuesday makes a lot of sense because it covers the first couple of days of trading during the week, kind of gives you an idea where the week is going to go. And then the Thursday, you know, or Friday, perhaps, if you want that, you know, maybe we'll look at Thursday, Friday, and kind of recap the week. We can do it either way, but let me know what your preferences are. Also, I think on a Monday, Wednesday, Friday, Saturday type of basis, I'm going to put other information out. So I'm going to continue to put up videos that I may have pre-recorded. They may be of an economic nature. I may do an interview with someone. Also look forward to some collaboration I'm doing with some other gold and silver people. There are a couple of people that have expressed an interest in doing something collaborative. So I may start interviewing other people just to bring some additional content to the channel. I'm trying to grow the channel and grow the user base. But I wanted to let you guys know, I'm not stopping doing these reports. I know these are intensely popular. I've certainly added a ton of subscribers in the last month alone, and I appreciate you guys very much. I want you to know that, and I'll continue to cover this, so don't worry about it. If you see other content, broader content on my site, it's just to grow the user base, but I'm still going to do these gold and silver focused reports. Okay, I'll shut up now, let you guys get back to it. This is Rob with Gold Silver Pros. Until next time.